In the past few months, cryptocurrency prices came down from their highs after US President Joe Biden signaled plans to increase capital gains taxes, which lead to some investors selling off their holdings. However, this did not stop financial services from having a positive outlook towards digital currency. In today's video, we will looking at the 10 common mistakes cryptocurrency traders do. Hi there. It's Bashbox and I'm happy to welcome you to another video. Don't forget to hit the like and subscribe button for more videos. Here are the top 10 common mistakes crypto traders do the most. The newbies in the crypto market often tend to play the same moves as the experienced traders. But do they succeed and make enough gains? Well, let's check it out. An introduction to crypto space. The people who want to make money easily and at lightning speed often look at different options. Among the various options, the cryptocurrency trading or staking may also be included. In many cases, the new traders without strong knowledge tend to lose all their earnings. Common mistakes a newbie crypto trader do. 1. Not building a strong base. Knowledge is such a treasure which cannot be stolen nor let out. So building such a treasure is the first and foremost thing any beginner needs to do in case of planning any investment. But some of the new traders fail to do so. Only by going through word of mouth or by following any trader, the newbie often invests in the assets without having a proper knowledge of the market. This type of investment often leads to a loss of funds. In some cases, the whole investment may turn into loss with a blink of the eyes. 2. Investing without doing proper research. In case the trader has gathered a pretty good knowledge about the market and its movements, it is still important to know in-depth information about the asset you want to invest in. The new trader often fails to conduct a deep research on the asset, its previous performance, the pump and dump and its reasons, etc. This may also attract losses to your funds in case you have invested in non-performing assets or scams. 3. Getting scared of market volatility. The crypto market often is termed as volatile as the price fluctuate every single second. The seasoned traders are used to the market behavior and upon their knowledge and past experience, tend to make profits from the dump also. On the contrary, the new traders get tense with every dump and may take improper decisions being scared of the market volatility. 3. FOMO trading and FUD. The most happening mistake the new traders make is the FOMO trading and FUD. FOMO generally means fear of missing out. Here, whenever the market is about to shoot up, the traders having the feeling of missing the opportunity, just grabs the asset without having another thought. In other cases, FUD is abbreviated as fear, uncertainty, doubt. It all happens when some negative rounds of news or blog just spreads over the market, which creates a negative impact on the traders. 4. Not building clear strategy. Seasoned traders often with their experience build a strong strategy which help them play safe in case of a bearish trend. Often they do share their strategies, but the newbies often fail to do so. Without having any goal or a strong strategy, no success or profit can be minted. This needs to be given the prime focus before investing in any asset in any market. 6. Not maintaining key phrase. Maintaining a key phrase or storing them in a secured way are always considered a sign of a good trader. Therefore, securing passwords or key phrases and transferring to the proper address needs to be a good practice. 7. Flow by the trend. With any uptrend or downtrend, most of the traders often set a buy trend or a sell trend. A good trader often does not get carried away with the trend set by whales or a seasoned trader, but always do his own research and go by his trend. 8. Fall in traps. Without having a proper knowledge, the new traders often tend to fall in the trap of the Ponzi schemes or scams or non-profitable investments. It is suggested that a trader needs to understand the people behind the project, the white paper, the working and the benefits of the project, and later move ahead with any investment. 9. Being very impatient. Patience is one of the strongest weapons anyone can possess. For any returns, you need to have ample patience. After making a solid buy at the bottom, agitation kicks in. People usually keep checking the price variations every minute and expect it to skyrocket. The stress this causes will override the sane and logical emotions, causing you to vacate the position by selling. 10. Panic selling. The crypto market tends to touch the rock bottom prices within a fraction of seconds. And hence this creates a big panic among the traders who tend to immediately sell off their holding without a second and a patient thought. Therefore, a trader needs to be patient as mentioned earlier, and save himself from doing any panic selling. Kindly use the link in the description of this video to buy and start trading. So there you have it. 10 common mistakes cryptocurrency traders do. Also, don't forget to click on the subscribe button and notification bell down below, so you get to know whenever we post similar videos like this. Thank you for watching, and see you in the next one.